Hello and welcome back to the channel, and this one we're talking about trading lessons that I've learned in 2025. So let's jump into it. If you're new here, I talk about all things trading. My name is Sean, I'm from the UK and I've been trading now for about 4 or 5 years. So brief introduction to kind of who I am. On my channel you'll find lots of different trading evergreen content, so go ahead and check it out by hitting subscribe on the YouTube channel. You can alternatively follow me on X at @SeanTrades_. I greatly appreciate your support, and with that, in this video we're going to have 4 different topics to talk about, and the first one is going to be the type of market, the kind of awareness around it. So let's jump into that. So one of the lessons I learned was obviously in the first probably quarter or so up until April. It was a bit choppy, not too sure what's happening. Obviously you've got Donald Trump kind of coming into office. It was lots of uncertainty around the markets, etc. You kind of knew that rates were going to cut, but you didn't really know when. And I think the main point to take away from this first section of the video is basically just being aware of the type of market that it is. So in April then it changed to basically a bull market. Obviously we weren't to know that back in April, but over the weeks and the months that kind of went on from there, kind of September, August, you're starting to think, oh, actually we're very firmly into a bull market. So you just need to be aware of how you're trading that. So if you're swing trading that, you know, you might want to add the 20-minute average to 50-minute average, that kind of thing, or just follow the trend-based kind of signals. Whereas if you're in a bit of a choppier market, you might want to just take some shorter positions, maybe size down a bit, have some closer target profits, etc. So just kind of get in the wins where you can. Whereas a bull market, you can actually kind of buy low, sell high, essentially kind of at the kind of beginning of the run. You know, you never know where the beginning really is, but you can kind of just ride the trend up. So just being aware of what kind of market you're in. Now looking into 2026, of course, but it's still unknown. I don't know what's going to happen. You don't know what's going to happen. No one knows what's going to happen really in 2026. Just be prepared for what's coming. If we get a bit of a dip, then just kind of cushion yourself for that dip for, you know, future momentum if you're a bit more of an upside trader. If not, if you're a day trader, a bit more of a shorter term trader, then just ride that wave and just keep taking those little gains here and there. That's lesson number 1 that I learned there, which is kind of basically being aware of the market and kind of running with it. The second one I want to talk about is my growth within technical analysis. Now over the last kind of 4 or 5 years, obviously I've been doing lots of technical analysis and that kind of stuff, and I've started with many indicators, moving averages, RSI, MACDs, all basically anything you can name it. At the moment this year I've kind of minimalized it slightly, so with the day trading side of things, or shorter term trading should I say, it's very minimal. So I'll use like a moving average cloud now, and just kind of ride the kind of trends within that. And of course I use support and resistance lines to kind of get an in and out of trades generally alongside the trend line to kind of retest. Now when it comes to swing trading, I do all of that as well, but I kind of combine it with the bigger moving averages. So with swing trading, I like it to come down to the 200 moving average, or if in extreme cases it might come down to the 300 moving average, which is an interesting tip that I learned this year from my kind of co-host, I guess, on Sundays, Kay. All of you know the Kay, I'll pop him up on the screen for you. So yeah, I learned that from him. He uses the 300 moving average for his swing trades basically all the time. So I've added that into my arsenal, and of course I've just kind of kept all of my keyword here is minimal. So if you have too much stuff on the chart, it's too much to kind of look forward to. Of course you're looking for confluence, but look at confluence in the right areas. Look at the volume profile, for example. The moving averages, if they're kind of combining, if they're crossing, fantastic. That's when you tend to kind of execute your trades generally, at least in my opinion. And of course breaks of trend lines, breaks of resistance lines, that's another way of getting in. As long as you combine all of that with the confluence that you've kind of got on the chart, then you're getting somewhere. So by all means start with 100 indicators on your chart, but just make sure you kind of whittle them down, get kind of what you're comfortable with, and go from there. Now the third lesson I've learned in 2025 is all about profitability. Now of course 5 years ago I was not profitable. I've done a video on this in the past, I'll stick it up in the top right hand corner for you, but it's kind of the kind of reality of trading. The first year obviously not so good, second year also not so good. I didn't lose loads of money the second year. The third year I kind of broke even. The fourth year was last year, or this year, no, it was last year. I'm in my 5th year, silly me. The 4th year I was barely profitable, just over, I guess, kind of not break even, but it was good enough to feel good about my year. This year I've become very profitable in my opinion, and my goals, etc. So obviously everyone has their different goals and their kind of different aspirations. Some people might want to hit 100% on the year, some people might just want to hit 10% on the year. That's different for everyone. For me personally, I've hit my goals and I've exceeded my goals, which is fantastic. I can take that information and backtest and head into 2026 feeling really good about myself. But I think the lesson I want to kind of pull from here is this kind of experience really is everything. Looking at those charts on a fairly often basis, not so much daily. I look at the daily, I don't look at it daily now, but definitely weekly and definitely monthly if you want to get better as a trader. Understanding the price action and where it might come down to, why it comes down to that, and why it bounces off certain areas. I think that's really key, especially on the shorter time frames as well, just because that's where the emotions play. You know, a stock chart is basically emotions. That's all it is on a chart. So yeah, I think that's the key message that I want to bring across there, which is keep playing on that experience and keep building yourself to kind of get better as a trader. Don't just do the same things. Keep building, keep getting that experience as you go along. The fourth point in this video is going to be a little bit more exciting. It's the prop firm challenges, which I started in July of last year, so 2024. Obviously failed the first like 3, I think it was, and then I passed. I got myself into a kind of funded account, and of course after a couple of months later I kind of lost it. It was just part of the trading. I think it's just not, when you get into that, obviously experience, it's new, it's fresh, it's exciting, so sometimes you just make mistakes, you lose your account. For me personally, it was the kind of daily loss limit, which is very simply over trading, revenge trading, which is, I'm not proud of it, but it's part of the journey. Since then, I've had accounts where obviously I've got payouts, which is fantastic, and I'm looking to continue that journey going into 2026, hopefully sizing up into those prop firm challenges as well. But just be aware of prop firm challenges. The rules are there for a reason. Of course, they are there to not get you out, but they're trying to make you disciplined traders. But if you're heading into a challenge, you should really be disciplined enough to not lose that challenge, if that makes sense. So just be careful when you go into these prop firm challenges. It may seem cheap. So for me personally, I use FTMO. So it may seem cheap at first, but of course, the more challenges you do, the more money that kind of really racks up, and that's kind of hitting your P&L on the year. Now, luckily for me, this year I'm profitable regardless of whatever challenges I've done or haven't done. So just be careful when you're heading into prop firm challenges. Maybe I'll do a video on prop firm challenges in the future. Comment down below if you want to see that. I'm happy to do so, of course. I'll just give my tips and tricks on the prop firm challenges. And that's it for this video. I've had 4 lessons from 2025. I think you can get a lot of value from that. And of course, if you want to get further value on my channel, then go ahead and watch this video on the screen now. Make sure you subscribe to the YouTube channel. I really do appreciate the support, and I'll see you in the next video. Take care.